Ooh. Hello and welcome everybody to the Crypto Mining Show, your one-stop shop for all cryptocurrency news, at least as much as we can get to with one show per week. And today we got a lot to talk about. You can call me Matthew in real life or Blind Run on the internet. That means you have to come meet me in real life to call me Matthew. And it's Matthew, not Matt, because Matt is something you walk all over. So you guys can't walk all over me. Sorry. That is the way it is. Today we are going to be presenting this very simple point and then backing it up. The dip in Bitcoin price, of course, was due to a lot of miners being in a terrible lending position. and having to sell Bitcoin at a loss to pay off debtors. Now that a lot of them are going into essentially default and bankruptcy, etc., and the lenders are getting the Bitcoin miners back, the Bitcoin miners are not worth the money for resale from the lenders. In turn, what is happening here is that the lenders have begun to start mining Bitcoin themselves. What this means is we need to look at basically a calculation of how much it actually costs on average globally to mint a Bitcoin right now, and then compare that to whatever the lenders now mining are trying to recoup. Meaning that basically I'm saying the pump from Bitcoin here is I think we are getting to the point to where all the miners have gone bankrupt. They're going to go bankrupt, or a majority of them have. The lenders now have machines in hand and they don't have a good way of like recouping the debt. So they are going to go ahead and mine on them. Very interesting stuff going on here. We're going to get into that and go through the articles and to kind of explain where I'm getting all this information from. Of course, there are always other factors. A huge factor that's going to play into here, of course, is going to be regulation, which is probably going to get pretty stringent here over the next few days, few weeks, few months, and years, especially as we start to see pressures economically impact a bunch of different countries, all the way from China to Russia to the United States to Canada. It really doesn't matter who you are at this point. There are going to be issues surrounding it. And at the end of the day, the regulation is going to pressure, of course, the price of it. Now, does that mean, of course, that the price is going to go down from it? Not necessarily, because if you have a position where the economy is doing poorly, there is that argument still from the Bitcoin maximalists that Bitcoin is a hedge against inflation. So, will that prove out to be true? It's hard to tell. You know what I say, that if we're looking at, the past halving cycles, to me, everything looks to be in order. And what we're seeing here from this current pump seems to be a reassurance to me, not that it's going to go into another bull run right now, but more that it's just on pace to actually repeat previous cycles. So recovering to that cost to mint and then holding until the next halving is basically what I would propose as to be happening. Of course, none of this is financial advice. I'm not a financial advisor, and I'm dang sure not good at this, as you guys are fully aware. I've had my own issues maintaining and figuring it out, but you guys get to come along with me for the ride as I learn, and hopefully you learn along with me. Let's get into all of that and more after a word from today's sponsor. And this one is a big one because we haven't had much sponsorship lately. So I want to say thanks to these guys for the sponsorship. I think also on top of that, right now they're doing a giveaway. You can check it out in the pinned chat over on the live chat for YouTube, and of course down in the description and the pinned comment. If you're looking to figure out, what you owe on capital gains or what your capital loss was so that you can file that with the IRS and all of that sort of stuff, they're here to help. Today's sponsor is CoinLedger. CoinLedger understands that crypto tax reporting can be difficult and is here to help. CoinLedger integrates with popular crypto applications and exchanges like Coinbase and MetaMask. Seamlessly import your CoinLedger tax reports into TurboTax and feel at ease. For a limited time, check the description on this video for a chance to win a free CoinLedger tax report. Get started for free today at coinledger.io by following the links in the description. Use promo code SONOFATECH for 10% off. And welcome back, ladies and gentlemen, boys and girls. So we are talking about sanctions, not just sanctions, really talking about regulation that will, of course, include sanctions, and kind of we've seen this go on for some time as far as bypassing sanctions in, Russia for using Bitcoin. The Russian banks, or the central bank, basically giving kind of leeway to the oligarchs for utilizing cryptocurrency because of the need for it. This is probably going to be, something that ends up being a point of contention, especially when we get further and further into, of course, the conflict that is going on between Ukraine and Russia. And of course, really at the end of the day, NATO and Russia, or really NATO and BRICS, if we're being completely honest here. And it's important to note also the influence that BRICS is going to have over the entire economy moving forward too. But this one's kind of along those lines. Nexo office in Bulgaria raided in sanctions probe. Over 300 Bulgarian investigators are involved in the raid, while Nexo tells Blockworks the allegations are absurd. The offices of troubled crypto lender Nexo have been raided by Bulgarian officials for alleged financial crimes, including money laundering, tax evasion, and fraud. Over 300 officers and regulators have been involved in the investigation, and police have searched over 15 addresses related to Nexo. Local news website Standard reported that the investigations are part of a larger international operation that is looking at violations of international financial sanctions against Russia, although the probe is currently limited to Bulgaria. Now, I want you to keep this in mind. We are looking at a larger international operation. There are going to be multiple attacks, in my humble opinion, on cryptocurrency. And it is because of essentially the ability for cryptocurrency to kind of circumvent the sanctioning, right? This is going to mean that will be utilized as an attack vector by nation states, right? By whoever it may be, members of NATO more than likely right now, and then moving on from there. And it'll be interesting to see how this applies across the board, especially when we take into account, of course, the stuff that was going on in China, where China kind of banned Bitcoin mining, and now they're kind of backing off on that. Kind of going to be, I think, a huge point of contention between essentially NATO and BRICS for quite some time. And what ironically may happen here is that the states that are purportedly free, right? The nation states that are free, like the United States, like the UK or whatever, they have some sort of freedoms or whatnot, or along the civil rights movements and so on, are going to move further away from financial freedom. And you're going to start seeing, oddly enough, this kind of lenience in the BRICS associated countries to being more financially free. And that will be enabled by cryptocurrency. But really what it is a tussle of, power between these entities. So it's this weird irony that's going on, at least in my humble opinion. The Nexo spokesperson told Blockworks that, quote, they are inquiring about a Bulgarian entity of the group that is not customer facing, but only has operational expense related functions, payroll, customer support, and back office. Adding, the allegations are absurd. We are one of the most stringent entities with regards to KYC and AML. Since the onset of the war in Ukraine, we have helped raise millions for the victims there and restricted clients from Russia and sanctioned regions. End quote. Nexo has also publicly responded to the news on Twitter, assuring that the company has not been involved in any illegal activities. We have turned down a lot of business because Nexo never make compromises with regard to our very stringent anti-money laundering and know your customer policies, the company tweeted. Adding, unfortunately, with the recent regulatory crackdown on crypto, some regulators have recently adopted the kick first, ask questions later approach. In corrupt countries, it is bordering with racketeering, but that too shall pass. The price of Nexo's Nexo dipped by roughly 6%, but has since recovered. The token has not participated in the broader crypto market rally in recent days, meaning really, in all honesty, Nexo isn't recovering because it should be following the broader crypto market, especially considering the fact that the primary lending options on their platform is going to be stablecoins, Bitcoin, and Ethereum. So if it's not following that that recent pump, it is in theory not as trustworthy, meaning it is going down. The only reason the recovery happened back to the original price was because of the pump of the broader crypto market. So I wouldn't trust that Nexo is going to recover. Now, as far as Nexo is concerned, from a perspective of, do you support this or do you not support this, right? Well, we go back to the fundamentals of cryptocurrency, and you say, at the same time, with a lending platform like this that is centralized, I wouldn't touch it with the 10-foot pole. That being said, it is important to pay attention to how regulators are approaching these centralized entities, because that will have a rippling effect across the entire market. And we will have to pay attention to how that plays out. The real crux of the matter is that in a bid for control at the end of the day between, like I said, like the NATO aligned countries and the BRICS aligned countries, the actual monitoring and sanctioning of cryptocurrency itself is going to be quite difficult, which really puts the future in a different position, right? Like the past, it doesn't always repeat, but it rhymes. And the rhyming part here is the unknown is going to be this shift into digital currencies with these conflicts. And I think that's really where, there's going to be a ton written about this, in the history books 10, 20, 30 years down the line. And we get to live through it. So I feel extremely blessed to a certain extent to get to live through this and witness it, because this is one of the most exciting times that you could be alive. It's a lot more exciting than just being, having your entire life be unchanging for the most part. Thanks to tech and how fast everything moves, we get to see basically multiple revolutions in our lifetimes, especially as a millennial or a little bit below that, or even Gen X. It's really cool that we get to experience a lot more change than past generations really have. Now, more regulations going on, right? We got to talk about it. We have SEC now, big one, alleges that Gemini, Genesis, and Genesis sold unregistered securities. And let's go ahead and pause this so it's not just playing there. Gemini and Genesis have been engaged in a public spat after Genesis suspended withdrawals last year. The U.S. Securities and Exchange Commission, SEC, alleged crypto exchange Gemini and crypto lender Genesis Global Capital sold unregistered securities in a lawsuit filed late Thursday. The investment regulator took aim at Gemini Earn, the troubled yield-bearing product that hundreds of thousands of U.S. investors entrusted with their crypto. Gemini generated yield on billions of dollars in crypto by loaning deposits to Genesis, which loaned them out again. But Genesis's November closing of lending withdrawals left some 340,000 Gemini Earn customers and about $900 million in crypto limbo, the SEC said. Genesis is owned by Digital Currency Group, which also owns CoinDesk, which is where we're actually reading this article from. The regulator accused the popular program of being an unregistered security. Quote, defendants offered and sold the Gemini Earn agreements through the Gemini Earn program without registering, end quote, with securities regulators, and the complaint said. As a result, investors lacked material information about the Gemini Earn program that would have been relevant to the investment decisions. The lawsuit is the latest twist in high-stakes CEO battle pitting the Winklevoss twins of Gemini against Barry Silbert, head of the DCG. The Winklevoss twins, shaken by the fall of their popular yield product, have accused Silbert of fraud in his company's management of Genesis. Silbert calls the brothers' accusations a publicity stunt. The lawsuit is a manufactured parking ticket, said Gemini co-founder Tyler Winklevoss, responding in a Twitter thread. He noted that his company had been in discussions with the SEC over the Earn product for nearly 17 months, and the agency never raised the prospect of any enforcement action until after Genesis paused withdrawals on November 16th. Well, obviously, if you're going to have withdrawals paused, right, it's going to bring into question all of these Earn programs. And saying that you have been talking to the SEC when we know for a fact that SBF, basically the cause to all of the troubles within crypto recently, was also discussing regulations with the SEC, means jack all. Nobody cares that you were talking to the SEC because, as we know, as the public knows, the SEC is just as corrupt as every single other entity that is trying to regulate cryptocurrency in their favor at this time, and basically participating with them with traditional finance and basically giving them all of your inside tips on how to make extra money and money launder through giftings to Ukraine and then back into investing into FTX holds like basically no water, right? You are essentially saying, well, we were working with the mob and therefore we hope that the mob doesn't turn against us. Sorry, but the mob turns against you. That's the way this works out. You get in trouble, right? It's not like the mob boss is like, yo, like you did some crap and now you're going to prison. Now I'm just going to go ahead and protect you. No, that's not the way that happens. You get in trouble now. You were working with them, but guess what? You were the one that is caught red-handed, so you're the one that gets in trouble. That's the way this works out. So obviously this puts it in a favorable light because of the relationship between CoinDesk and of course Genesis and Gemini. And at the end of the day, like we've talked about this for a very, very long time. The only thing that a centralized exchange should be doing is enabling users to basically convert from, right, essentially, and any custodian really, right? Like a custodian like this, it might be a little bit different, but you're not self-custodying in Gemini or Genesis for the most part, right? Usually. So there's obviously we have relations between, I believe it was Gemini that was the custodian for BlockFi, a lot of these different companies, right? There are relations between all of them. And we can't have a position where the funds aren't there purely for the purpose of exchange. The only thing that an exchange should be profiting off of is fees for the transaction to convert from the new future of digital currency into the past, of course, system of fiat currency. That is pretty much, that's what you get paid for as an exchange. As a custodian, you can get paid for fees for doing that. As soon as you start manipulating the money and the cryptocurrency along with the fiat system and playing these number games with urns and stuff, I mean, it doesn't look good, right? And I think like as far as like my perspective has always been to be very cautious around these. I had a little bit in BlockFi when I was testing out the platform, when I was interviewing them for potential sponsorship. Ended up obviously not going with it, but we did talk about them a little bit. The reason we didn't go with them was because obviously it kind of, at the end of the day, when I looked at it fundamentally, it didn't align fundamentally with the principles of cryptocurrency. So if you can start to get yourself in a position where you understand those principles, you can start to get into a position where at least you protect yourself a little bit more. There are other places where clearly I have failed, but where we have ended up maintaining a pretty clean slate is within these types of endeavors, right? And it gets extremely tricky, I think, for a lot of content creators too with these sponsorships. So I wouldn't throw any shade at any particular cryptocurrency channel or anything or influencer that did take sponsorships. The ability for a lot of people, especially in a bull run, to see past the $ in fiat value is high, right? And what that means is like, obviously, like when greed starts to take control over that, you can be in a position where you are blinded to the potential risks of any given project, right? And that falls in line with pretty much anything in life, right? Anytime you start to get blinded by that potential revenue or that potential big gain, you can end up in a position where you compromise your morals, principles, and values and ethics and so on. And this, you can see this across the industry as a whole, right? So there are potentials where people, there is potential, right, where you extend the olive branch and say, okay, I get it. You didn't see that happening. It wasn't intentional or so on. And I think intention is really what should play a part in here. But you know, it's hard to believe people as well. So I get that perspective, and a lot of people are hurting. My goal, obviously, with the channel is to be as careful surrounding that as possible for you guys, but we all make mistakes, right? Regional lender Metropolitan Bank to exit crypto-related assets vertical. Metropolitan Bank Holding Corp said on Monday it will exit the cryptocurrency-related asset vertical as the digital asset industry slips deeper into a crisis. MCB said it expects minimal financial impact from the exit. It has 4 active institutional crypto asset-related clients that account for about 1.5% of its revenues and 6% of its deposits. A clutch of crypto firms gripped by an industry-wide downturn that has deepened with the collapse of major exchange FTX has filed for bankruptcy protection in the recent months. The crypto world's woes have continued into this year, marked by plunging deposits, layoffs, and multiple legal hurdles. Last week, crypto-focused bank Silvergate Capital reported a sharp drop in fourth quarter crypto-related deposits as investors spooked by the collapse of FTX pulled out more than $8 billion. MCB said it had no loans outstanding to any of its crypto asset-related clients and that it does not hold crypto assets on its balance sheet. But it's really, really interesting to take a look at this because what you are seeing is banks starting to exit, right? And as banks exit, you do lose that institutional investment, right? Which is what everybody has been talking about for forever, is like the importance of institutional investing. I do not think that institutional investment is something that I'm necessarily concerned with. Now, obviously, I go back to a principled standpoint. I think the Bitcoin is for the people, not for the top 1%. I think that it is supposed to go completely against banks like Silvergate. Seeing them pull out, obviously, that can drop the price of Bitcoin. But why do I care about the price of Bitcoin if my entire intention is to replace the current system with a new one that's supposed to function better? If that is my actual intention and what I actually believe in, then whatever happens in between that is all just for now. It's not for the future, and therefore it shouldn't really affect my feelings surrounding the matter. Obviously, you know, people are going to have a hard time with that concept because you do want to have that number go up. I get it. It's just at the end of the day, you know, I don't necessarily think that I am in the position where I want their participation as it sits anyways. Hut 8's Ontario Bitcoin mining operation halted amidst power disputes. The mining company confirmed the operation is still shuttered after contractual disagreements with their power provider, Validus Power. Hut 8's Bitcoin mining operation in North Bay, Ontario. And this is a big deal, guys, because remember, Hut 8, we thought we're doing okay. We have we have Marathon Digital, but it seems like the domino effect is hitting here. A lot of it, of course, surrounding the price of energy. And the fact of the matter is a lot of these power agreements and power companies that were, or the power agreements that power companies were putting out there are in a position of not being as straightforward as I think people expected. And it's putting miners in an awkward position. And the price of Bitcoin has to come up significantly to really accommodate for all the increase in energy costs that's been happening, right? But previously, Hut 8 notified the public of problems with Validus in November of 2022, as the firm reported in its Q3 operations update that it had issued a notice of default to Validus for failing to hit certain operational milestones. Mining at the facility site was completely halted 2 weeks after this as Validus stopped supplying power to the facility while delivering its own default notice for payments that it claimed Hut 8 failed to make. The mining company's Q3 report also stated that Validus also has demanded the company make payments for delivery of energy that are higher than these negotiated under the terms of the PPA. See, the thing that gets really interesting here, because obviously this hit me before a lot of other people, or the reports, technically I guess it was hitting around the same time. We're just not getting the reports of it. These power agreements are not always set in stone as much as you would think they are. And there are ways around it, right? I've seen the ways around it. It's very frustrating, and it does feel very unfair, but that is life to a certain extent. It's just at the same time, you had a declining price, obviously, in Bitcoin due to all of the issues going on, and it puts miners in a bad position, right? They over leveraged, they got out too large of loans in a lot of cases. And the power companies are also in trouble because of, obviously, new regulations surrounding the cost of power. We also have, of course, availability of energy, which is obviously a huge problem. And then as far as the relationship for North America and the price of energy, there is a big effect of not continuing with that pipeline that would have definitely changed things, I think, from an energy perspective between Canada and the US that was obviously put to the side. Fluctuating power costs can have a major impact on Bitcoin mining operations, and favorable power purchasing agreements are an integral part of a sustainable firm. According to their most recent December update, the company is continuing to explore alternatives to mitigate the impact of the dispute with the third-party energy supplier to the site, including through organic and inorganic growth opportunities. Hut 8 has indicated that it fully intends to resolve the issue and restart operations as soon as possible, whether that be through a resolution involving Validus or, as the company indicated, a potential alternative power supplier. Now, I think that obviously, I think that when it comes to PPAs, and look, it's probably highly advised that you get some legal assistance when looking at these PPAs. In my position moving forward, there will always be some sort of legal representation when signing and before signing any PPA. Now, that does cost you more money, but if the flip side to that is that you end up with a completely shut down farm, then obviously it's worth the money up front. And that is one mistake that I will regret for quite some time, right? And it's one that I'll warn you guys about now before we get into, starting to really spin up mining again a lot. Now, Tom's Hardware, of all places, has reported on the new Intel Bitcoin chips, which was actually not reported on quite much at all, but they are out now. And this is coming from Hive, and they are, of course, the Bitcoin mining chips, and they lower the power usage, but we don't have access to them on the broader market. Cryptocurrency mining company Hive Blockchain said this week they had begun to deploy 5,800 Intel Blockscale accelerator-based BuzzMiner mining systems that it designed itself. To date, this is the first large-scale deployment of Intel-powered mining machines. Also, the company disclosed that it earned $33.15 million in December by lowering its power use, and therefore the number of Bitcoins it mined, reports CoinDesk. Crazy. Hive constantly optimizes its hardware to improve efficiency and lower power consumption. Late last year, the company ordered the production of 5,800 Hive BuzzMiners, cryptocurrency mining machines that it designed itself based on Intel's Blockscale custom ASICs. So far, the company has received and installed 1,423 of these machines and shipped 987 systems to Sweden, where they will be installed by January 15th. The remaining systems will be tested and shipped by the end of the month. In addition, Hive plans to replace older ASIC and GPU-powered mining hardware with its own BuzzMiner machines. Meanwhile, Hive appears to be the largest buyer of Intel Blockscale chips. Also, the company recently procured 3,570 Bitmain S19j Pro miners, 2,050 of which have been installed already. Hive mined 213.8 Bitcoin in December, using ASIC and GPU hardware, which equaled 113.2 Bitcoin per exahash. Meanwhile, the cryptocurrency company earned $3.15 million in income from its energy price hedging and grid balancing strategy. It essentially means that it did not mine when the demand for energy was high. Instead, it sold electricity back to the grid. An interesting fact is that Hive's production was down about 20% month over month in December. Meanwhile, the company's grid balancing strategy in selling electricity back to the grid more than offset the declines in cryptocurrency mining. Cryptocurrency mining got significantly less profitable in recent quarters due to the lower demand for Bitcoins because it got harder to mine cryptocurrency, which is why Hive and its rivals must improve their efficiency to stay in business. Quote, our technical team has updated our software stack, which monitors the vital statistics of our global fleet of ASIC miners, said Aidan Killick, president and COO of Hive. This allows us to have great insight and granularity into the performance of each machine using bespoke API calls as we carefully study the overall fleet efficiency in joules per terahash to ensure we are mining for maximum profitability during a Bitcoin bear market. We continue to strive for excellence, ensuring that as we scale our hash rate, we also optimize our uptime to ensure ideal Bitcoin output figures and leading the sector in performance. Now, we've talked about this before. And one of the big things that is difficult here from a principled stance of Bitcoin and cryptocurrency in general is that mining is no longer one CPU, one vote. That's gone way out the window. And with the production of ASIC miners, obviously the biggest complaint was that Bitmain was one of the only, for the longest time, producers of Bitcoin mining hardware. And it was incredibly hard to compete with them because they would mine on the latest and greatest hardware and wait until they had a new model before they would sell you the old model. But at least they would kind of sell you the old model in a reasonable amount of time. In the current kind of sitting that we are looking at, right, in the current setting with what's happening between power companies and companies like Hive and so on, is the forcing out of like the general public from mining. It is nearly impossible to compete. And once you have things like a custom ASIC that is being developed in-house by the same person that mines on it, and Intel is supplying them with those, which means they get a great deal of reduction in cost. It means that the competition, you know, the ability for people to build themselves up to a position where they could potentially run a large company like this is near nil, right? Because you don't have access to the hardware, you don't have access to the power companies, you don't have the access to actually fulfill, you know, what your dreams may have been within cryptocurrency mining, where these stories of like the people that built up from nothing into large farms is really what you aspire to, at least what I aspire to. You see somebody like Bitsby tripping and you see the success and you're like, man, like it was so close, just a little short. Obviously he has a lot more knowledge surrounding it, but that being said, you were hoping for a little bit longer to get there. And now it feels like that bar is set higher and that goal is moving further and further away because of the restriction of access to the hardware to actually do it and restriction of access to the power and the price surrounding it, which I did also want to mention that we'll talk about later on locals is going to be this attack on essentially, the attack on gas, right? Natural gas that we're going to need to discuss in relation to how that impacts Bitcoin mining when it comes to flare gas and methane and all that sort of stuff, right? Now, all these miners have been having trouble, right? We've talked about it. And except for, of course, Hive here and their Intel miners. But does that mean the hash power goes away? And the answer to that is no. Why is the answer to that no? Well, currently what happened is a lot of the large miners are going away because they took out loans backed by the hardware that was mining the cryptocurrency. Well, if you took out a loan on a machine that was worth $12,000, you know, last year, and now it's worth $2,000, and then the company recoups their loss by taking the mining machine back, it now has no way to sell that on the used market to make their money back on the loan. It's actually so bad, the margins are so terrible for them that the only option for them now is to begin mining with these machines, quite interestingly. So crypto lenders now are morphing into miners as repossessed rigs pile up. One way for the lenders to prevent further losses from defaulted loans is to keep the collateralized machines running and generate some income. Crypto lenders have repossessed so many Bitcoin mining rigs, they're resorting to plugging them in and extracting tokens themselves. Lenders are getting creative as to what they can do with mining machines, as they accepted as collateral for some $4 billion in rig-backed loans that were underwrote when the rally of Bitcoin seemed unstoppable. With the recent surge in loan defaults and plunge in cryptocurrencies, the value of new generation machines has dropped 85%, according to data from Luxor Technologies. While some machines are just sitting in a warehouse waiting for prices to recover, lenders like New York Digital Investment Group, LLC, are using debt negotiations to find alternative solutions. In December, NYDIG agreed to pay Greenridge Generation Holdings not only for its mining rigs, but to operate them in exchange for debt reduction. The deal effectively made Greenridge one of the largest Bitcoin miners, a hosting firm, while NYDIG became the miner. We talked about this last week. Lenders are flooded with mining rigs, said Wolfie Zhao, head of research at the Miner Mag, a research arm of the mining consultancy Blox Brig. One way for the lenders, to prevent further losses from defaulted loans is to keep the collateralized machines running and generate some income. Now you can see here crypto mining loans at risk and it's crazy. It's an option lenders are taking more seriously, especially those that already have mining capabilities to build on, including Galaxy Digital LP and Digital Currency Group's Incorporated Foundry. Bitcoin mining, which uses specialized computers known as rigs to validate transactions on the blockchain in exchange for rewards in the token, was among the most lucrative businesses in crypto. Miners had sought to leverage that value in the run-up of Bitcoin's historic rally. But with a surge in energy prices and Bitcoin down 58% on the year, a number of loans are now underwater. A Valkyrie index of Bitcoin miners is down 75% from a year ago, even after this week's 30% jump on optimism a U.S. economic recovery could prop up crypto prices. NYDIG originated about $378 million in rig-backed loans to miners between October of 2020 and May of 2022, according to data compiled by the Miner Mag. Already, it's received about 26,200 machines from Stronghold Digital Mining Incorporated to eliminate the miners' $67 million of debt, and it's likely to take over another batch of machines from Iris Energy after it defaulted on a $103 million loan earlier. So here we go. NYDIG on the hook for Argo, Greenridge, Iris Energy, Core Scientific, Stronghold, Rhodium, and Cathedra. So obviously, what you would end up seeing, right, is I think it said it's already done 26,000 from Stronghold. Core Scientific is getting kind of bailed out by BlackRock, so maybe that'll be okay. We'll have to see how this goes, right? So lenders have been moving more rigs out of storage, said Mason Japa, chief executive at crypto mining services company Blockware Solutions. Quote, some lenders are already on the lookout for high quality hosting sites, he said. Lenders can recover some losses if they can find reliable Bitcoin mining facilities with cheap electricity, but they are hard to find. Of course, lenders may still choose to sell some of the machines, even at a steep discount, he said, but they may not want to sell a large amount as more miners such as Core Scientific go bankrupt. Even more machines are expected to hit the market. If that depresses prices even further, that means even greater losses for lenders. Now, as we start to see this recovery, what's important to pay attention to is going to be the price or the cost to mint a Bitcoin. And the reason behind this, right, is going to primarily be the fact that it will directly influence what the banks are willing to sell the Bitcoin for, especially if they think or are even aware of the halving cycle, right? Which means they're only going to be wanting to recoup cost, if they have to. and to a certain extent recouping some of the cost and then holding on to the rest of the Bitcoin in hopes for a pump in the future could be a legitimate strategy from some of them. And we'll kind of just have to see where they decide to go from here. Of course, I've done the math. We have it up right now. So we're going to kind of talk about it a little bit. Now, there's a really good chart that I found on macromicro.me that's really close. And I'll tell you why it's really close. I'll tell you how I calculated it out as well. So on this one in particular, you can see the last 6 months. And then what you can see here is essentially a comparison between the average mining cost to mine a Bitcoin, and the price of Bitcoin, right? So you have the average cost to mint a Bitcoin at $19,572 and the cost of Bitcoin at $21,007. So I decided to do the math as well myself. Now, I did not do the math with anything beyond power. So first of all, the first thing to look up was the average cost of power. Now, not every miner is at this, right? Miners should be lower than this, but there are some miners that are getting over this though too. So we're looking at the global average of 14 cents a kilowatt hour. Okay. That's what we're working off of right now. That's not going to be true across the board. There's other options like methane. There's a lot of other factors that play into this. But to be completely fair, there's other factors that are also not calculated into this as well that would increase the price, like, of course, maintenance and hosting fees and so on, right? Rent, all of that sort of stuff, property tax, whatever it may be, right? Like all of these things that could impact, of course, the profitability. The cost of the machines isn't calculated in here. The only thing calculated in here is the actual power cost based on 14 cents a kilowatt hour to go ahead and mine Bitcoin. Now, what I found was, I did a little calculation. I found that right now it takes basically 273,000 terahash a second to mine 1 Bitcoin a day. So what I did there was I took, of course, that and I divided it by this is also going to be taking into consideration the current absolute best Bitcoin miner, the S19 XP right here at 140 terahash. Okay. So basically I pulled out a calculator, and we found essentially that, that equated to, I think it was like, 1950 Antminer S19 XPs, which equaled out. And then we took that and we multiplied it by 3010 watts, which is the average give or take power of one of the units. And then we found that we had basically 5,869,500 watts to put into, of course, the calculator. And then we just calculated the cost at 14 cents a kilowatt hour. And we found that it would be 1 Bitcoin mined in a day would cost you $19,720,000 at the current price. So this is where you end up with as far as the price to mint a Bitcoin. Once again, this is very, very basic, right? But what we want to see is essentially where the bottom line is from a power cost perspective only, or start to get an idea of what that averages out to across the board. I would say that what we are starting to see is closer to the average of 13 cents a kilowatt hour, even based on the old power operating agreements of 5 cents a kilowatt hour, based on the artificial increase due to external fees that a lot of different places are starting to charge, regardless of what their power agreement was in the first place, right? That's kind of what we saw, or I hinted at earlier, of course, with what was going on with HUD 8 in Ontario. Now, this doesn't mean that that is the total average cost to mine a Bitcoin for sure. End of story. It would be a little bit more difficult to get all of that completely accurate data. I'm fully aware of that. But I wanted to play this thought experiment out for fun, because what was driving the price of Bitcoin to go down further and further was not just, macroeconomic issues or the halving cycle or anything along those lines, but also these over leveraged miners that are having to sell Bitcoin at a loss to pay their debts, which was what was happening, driving the price even further. So as the lenders start to take back the mining rigs and start to put them on to mine for themselves, what are they looking at paying for a Bitcoin or to mine a Bitcoin? Well, maybe around $19,000. $20,000. What that means I would expect, right, is based on the previous halving cycles and what we've seen before, I would expect us to sit around that kind of $19,720 mark all the way until the next halving, where I would expect a pump up from that to come in. Now, I'd love to hear your thoughts and opinions, of course, in the live chat and in the comment section below. And I'm here to learn, so I definitely like to learn from you guys. And this is not financial advice. This is just, like I said, a fun thought experiment to play around with it. Now, what I do like to point out, of course, is that we are close to the macro micro charts as well. And this is a great chart that I'm going to go ahead and link to you guys as well, in case you want to take a look at it for yourself too. But for them to be able to recover the cost, they are going to have to mine above this. And because of the demand, the amount of demand for hosting space, right, and the increase in price of power, there will be a point where they are forced to take on power agreements that are probably more expensive than, is ideal. There's just not enough methane options going around, right? There's not a lot of these crazy deals going around for them to just get into a big facility and start mining off of renewable or getting great power agreements, because the power companies are starting to understand what's going on and what they can leverage here too. That means, I think, that you have a natural driver, of course, in the demand for Bitcoin, right? They can hold on to it longer theoretically because they're already at a loss, right? They don't need to recoup it. But we'll see how it goes. How about we get into mining profitability for me right after a word from today's sponsor. I want to thank each and every one of y'all for being here. Y'all are what keeps this channel going. I genuinely love doing this. I mean, to the point to where I'm working full-time and doing another part-time job and still trying to do this to the best of my ability. I realize that I am falling behind on a lot of the mining how-to content. I want to get back to that, but this is a time in the season in my current life, but I will be here to try to support you guys and help you follow along in my journey. If you would like to hear about my journey as I deal with the bear market and the YouTube channel and the mining farm and everything like separate, let me know. I'm thinking about doing a video or maybe a vlog series, just like once a week or once every other week, or maybe even just once a month, where I just talk about, what my current status is, what the businesses look like, what my day-to-day life looks like, and all of that. So if you're interested in that, let me know. I don't know, that'll probably go on the Blind Run channel, if anything. Let's go ahead and run the ad because they are supporting the channel, and then we will, and please, by the way, it's free to go sign up for the giveaway. Please just go sign up for the giveaway. See if you can win yourself, a free tax report. That'd be awesome. Today's sponsor is CoinLedger. CoinLedger understands that crypto tax reporting can be difficult and is here to help. CoinLedger integrates with popular crypto applications and exchanges like Coinbase and MetaMask. Seamlessly import your CoinLedger tax reports into TurboTax and feel at ease. For a limited time, check the description on this video for a chance to win a free CoinLedger tax report. Get started for free today at coinledger.io by following the links in the description. Use promo code SONOFATECH for 10% off. Boom, there you go, boys, ladies and gentlemen, boys and girls. Let's talk about mining. I am actually mining something profitable right now, thanks to BT miners. So check out the affiliate link down in the description below for BT miners. We're going to talk about this. You can use promo code SOAT, S-O-A-T, when ordering over there for a discount. So definitely check that out. What we got in store for you guys is, of course, Kadena, KDA. There's a new miner slated to release soon. We're working on a review for this miner, though, that recently released, that actually is on time and came out and is mining pretty well. So let's talk about it. Here's my F2 pool. I just went on to F2 pool real quick just because I didn't have a lot of time to get it up and running. But right now I'm paying about what I averaged out over December was 13 cents a kilowatt hour, to give you guys an idea. And then Kadena is basically doing around, 15 to 17 Kadena per day. So we got, around $15 per day, right? Let's just say around $15 per day. And then, you know, we can calculate that out pretty easy, you know, on what to mine or whatnot. We can go over to ASICs and we can just throw it in here. We'll get all the official specs, right? So this is 70 terahash a second, right? Which I think we're pretty close to. Let me make sure there's no personal information or anything into here. There indeed is not. Yeah, so the mine, oops, wrong button. Excuse me. Oh no. Well, that is a preview for the other stream. Anyways, we're sitting at 69.36 terahash a second, right? So we're looking pretty good as far as all that goes. And then the revenue, like I said, we're pretty solid as far as that goes. 70 terahash a second at 3,300 watts. I do have it plugged up to a watt meter. It is around that 3,300 watts. So I think it's actually a little bit below that. Ended up being a little bit below that, right? So then if we come into the calculator, we got, you know, 70 terahash a second at 3,300 watts. And then we were at 13 cents a kilowatt hour. And as you can see, it's 11 bucks a day. Of course, we're spending about $10 a day in power. And this says that we are doing estimated reward of 20. So we're not quite doing 20, right? We're doing about 15 or 16, somewhere around there. So it's not quite exactly what they say, right? So we're a little bit lower than that, right? Maybe by about $5, but we are profitable about $6.25 a day, theoretically, you know, after power costs or whatnot. So a little bit more than that. So maybe about $7 a day. So I am technically profitable on a mining rig. Does that cover rent of the mining farm? No. Does that cover, you know, renter's insurance, any of that sort of stuff? No, it doesn't cover any of that, liability insurance or nothing like that, but it is what it is. Yeah, I did notice that the screen share was dimmed as well. I was trying to figure it out earlier, but I actually don't know why, to be completely honest with you. Oh, I do know why. Hold on. You know, Windows 11 sometimes does updates and then they just apply shit, and they decided to just apply HDR automatically to my Windows desktop. So that is what was going on. So sorry about that. It's corrected late in the stream, but hopefully you guys didn't mind it. It's an evening stream. A little bit of dim isn't that bad. All right. So we fixed that. Cool. And yeah, so that's the IB Link BMK3 Kadena miner, you know, $37.99. I'm going to be building a solo node for it this week. I want to do that tonight. We'll see if we can get to it tonight. If we can't, we'll try to get to it tomorrow. So if we can get to it tomorrow, we will start testing solo mining Kadena on our own node. It looks like it uses Docker for the node, so hopefully that'll be good. And we'll actually be able to start catching up on what we should be getting, you know, around that 20 Kadena or whatever. We might play around with some different pools, that sort of thing. I was looking at the different pools that are available. You know, if the solo mining doesn't go good, you know, what are we looking at in general, right? Is Pool Flare going to be a better option for us? Is DX Pool, you know, should we move to one of these other ones? I already had an F2 pool account, so I went with that, but I really do like that Pool Flare has not only a solo option, but they're also anonymous. So I do want to probably switch to these guys potentially. So that's kind of something I was looking at, but I'd like to build my own node first. And all of the, definitely the percentage rates are quite high on a lot of these pools as well. So that's something to take a look at too. Other than that as well, let's look at mining profitability for GPUs on the 3090 at 10 cents a kilowatt hour, which is quickly becoming below the national average, of course. Cortex is at the top today, where you would lose 12 cents a day after 10 cents a kilowatt hour. Kind of scrolling down from there, there's the Grin, there's the BitTube Cache. Let's see, Auto Lycos has been pumping because Ergo has been pumping. You're only losing 19 cents a day after power on Ergo, because we had that Ergo pump that was nice. Kaspa is only losing 10 cents a day after power, and I think you can dial this in even more to make it closer to almost nothing. I'm kind of curious where Radiant's at. Let's go ahead and see if we can find it. Radiant down here is actually profitable at a penny a day on RTX 3090 at 10 cents a kilowatt hour. Pretty awesome. You can also get that power dialed in, that hash rate or that power ratio dialed in a little bit more on Radiant as well on the 3090. So that is something to take a look at too. So make sure you're paying attention. Now, as far as the ASIC miner profitability, I have found that this calculator that they have put into place over on BT Miners has been extremely accurate as of late. So I really like what they've done here. Plus you can go and buy them right away from here. You know, if you want to support a sponsor of the channel, you can go do that. Use the affiliate link if you don't mind. But right now, as far as profitable miners, period, they do list some that aren't available. The KA3 has been delayed. Last I heard, they definitely pushed it back to February. We're probably going to see them push it back even further. The K7, I believe, is also delayed. There was supposed to be a January batch, but I believe those went out further as well. So I think, as far as I understand, these January batches are not real. They're getting pushed out further from Antminer. So other than that, you got, of course, the Antminer L7, which has been the most profitable for quite a while. This is based on 10 cents a kilowatt hour. You're going to be sitting at $18.77 a day. If you go down below that, there is this Forest EPU 1C, which is dual mining your Zilica and ETC, Ethereum Classic, of course, and that is $13.58 a day. I don't know anybody that has this one or the availability on it yet. Let's look at the availability. It does look like you can purchase it. It is $6,000. That ROI is probably going to be a little bit intense, so just keep that in mind. And then from there, obviously, the one we just talked about that I got in stock is the IB-Link BMK3. That's $12.75 a day at 10 cents a kilowatt hour. Like I said, seems to be pretty accurate. Like if we looked at what to mine earlier, is that still in here? Yeah. It was saying 11 cents a day at 13 cents a kilowatt hour. Let's say to do 10 cents. Yeah, see, it's a little over what it actually is. So I think this calculator is a little bit more closer to reality. Still not quite though, right? And then the K3 Junior, it's a little bit less hash rate, a little bit less power, does 1127 a day. Actually, I think it might be the same power. Yeah, it's 5 terahash a second less at the same power. It's a little cheaper though too. So, you know, I don't think it's cheap enough to actually go with it over the other one, but maybe if availability plays in there. You also have the Antminer HS3. Just keeping in mind, of course, with these K3s, you do have the potential of the Antminer KA3 releasing and not completely necessarily making them unprofitable, but it could get pretty close to that, right? And then you have the iPolo V1 doing Ethereum Classic and Zilica. Once again, that's doing $10 a day. Then if we talk about the most profitable Bitcoin miners, we have the S19 XP, which is doing 140 terahash a second. And then its little brother, the S19 XP 134 terahash version, doing 251 a day. 265 a day for the XP 140 terahash version, and the Avalon A1366 doing $1.35 a day at 130 terahash a second. That's the biggest competitor to Antminer right now, so you might want to keep that in mind. Of course, let's look at availability on this one too. They do have them in stock. They have the 141 terahash a second in stock for $54.99. The best ROI right now that you can buy today, though, I believe is the K3. And that's like a year ROI. Once you get into the Bitcoin miners, you know you're looking pretty far out. So if you want to get into the Kadena ecosystem, it's really up to you. Do I suggest it? No. Why did I do it? Because they're a sponsor of the channel, and I would rather just take equipment than take money, because then I get more content for the channel. And now that I'm working a day job, everything for the channel is just going to go back into the channel once again. Probably should have done that a little bit longer. We make mistakes and we fix them, right? We'll be doing it. Let's talk about questions and answers before we move on over to the Rocket Chat. So remember, super chats are never required. Always appreciate first to be answered because they're the easiest to read. Tagging @SonOfATech will highlight the message orange and I'll be able to read it easier. Let's go ahead and get into it. I want to say thanks for the $10 super chat from Sheepy. Says Soat the Goat. Thank you, good sir. And a $5 Canadian from Custom Computing said Happy New Year, Soat. Always appreciate your content and dedication. 2023, here we go. Let's get into it, good sir. Let's go ahead and pop this chat out so I can read it a little bit easier because I am blind as a bat. We're going to go ahead and get this zoomed in on so that I can see. We got Gandalf saying, great, more big miners getting access to better hardware, leaving the rest of us for the scraps. Yeah, that is kind of how it goes, right? Mind Something says, "That's some tech." Just read Janet Yellen is telling Congress we have a couple months before the U.S. defaults on a debt obligation. She's just trying to get more money, isn't she? That is what it is, right? All right. Get some more questions in if you guys can. If not, we'll move on. Retro Mike coming in with a $5 super chat sticker. Thank you, good sir. Monfa says, @SonOfATech, what do you think of Grin Miner? I got 2 minis and so far they are doing pretty good. I don't have one. I did look at picking one up. I would like to get one, but it's slow and low right now. We get what we can get and we don't throw a fit. Pretty much how it goes, right? Ooh. Custom says, @SonOfATech, my renter just started triple mining ETC, KAS, and ZIL. On is that going on GPUs? Mind Something says, @SonOfATech, would love to hear your thoughts on Nexo. I have not done enough research on Nexo to really have any opinions on it. I'm sorry. It's busy. You know what I mean? Doing it on the G1 minis. Wait. iPolo F1 minis. Kaspa blocks are rolling in, says Gordon. I got to hook up. We're also going to be trying to mine Kaspa tonight on the FPGA as well, but I haven't gotten into it yet. We'll see if we can. That's what you're doing on the 5700 XT, Ethereum Classic, ZIL, and Kaspa, says Integra Guy. Can you cover power on that? Find me says @SonOfATech. Thoughts on Jazz Miner and Unminable? I don't really use Unminable. I mean, if you got the Jazz Miner, you might as well mine directly with like ETC and all that, right? M. Hammer coming in with a $50 super chat. Holla for $1. Biggest super chat in like a year. Baloo says, which FPGA you have on order? Well, I don't have one on order. I have one over here, which is the FK33. And then the one I am looking at for testing, hopefully I got to review this one first. Let's see where we're at. And then there are new ones that are coming available that you can buy separate. They're the individual boards that go into the Osprey. Dang it. Where's my... Okay. JC35s are ones I want to get, but those are apparently $800 a pop, so their ROI is not that great. Integra guy says that's some attack around 8 cents a kilowatt hour. That's pretty nice, dude. Alrighty. What we're going to go ahead and do is move on over to the locals, which you can find a link for, of course, in the live chat. I'll link it over here too. Sir Dante says, did you talk about Ergo already? No, we didn't talk about Ergo. M Hammer says $1.49. 11P8A, 6.9 cents else here, plus typical power BS. Yeah. Tennessee, we have a $200 base charge and then 5 cents a kilowatt hour on top of it. Incentive to expand. Yeah, that would be incentive to expand, which is interesting. All right. Go ahead and get this down for you guys. Head on over here. Oops, that's not right. That's the wrong one. Remove. It's pinned, but let me get you the... Why did that... Try to copy that again. We're going to be moving over to locals. We're going to be talking a little bit about BlackRock, as well as a little bit about the economy and so on. And then we're going to be looking at... seeing if I can build out a Cadena node and some stuff like that. So that's kind of what we're going to be doing. And thanks everybody for stopping in, and I hope to see you next Tuesday. Oh man, it's not letting me go right away. Silly geese. No. All right, hold on. This may take a little bit. I wish it would like let you go live early. It's really dumb that it doesn't. They should fix that. I think we're chilling over here a little bit longer, guys, because this live stream will not let me change the time, which is a little ridiculous. It's already Tuesday. We move over to locals here in about like 11 minutes or 15. I don't know, something like that. Have you heard the bad news on MSI Afterburner? I haven't. We'll look all that up, of course, at the other stream, I guess. I know, 20 more minutes. And I needed to take a bio break. I also need to set up the Rumble stream anyway, so I'll do that too. While we're at it, maybe we'll just go live on Rumble first. Yeah, that's what we'll do. That's what we'll do. Perfect. All right. Jeff says, that's some tech. I haven't been keeping up with crypto for a bit. Last I heard, Osprey Miner would support mining Ergo. That's what they claim. I have not seen the Bitstream for it yet, but I'm sure it's out there. I am sure it is out there. Just because it seems like it would be. Since they said it. More bad news for the GPU industry. I'll react to that when we get to the regular live or the after party live stream. How's that sound? I think that sounds good. Here is the all right, here's the Rumble. We'll head on to the Rumble now, and then we'll go from there. Have the Ergo devs commented on that? No, but remember Ergo in my first interview, he said that they wouldn't fork for that. Has there been any more progress on the Linux walkthrough? I mean, yeah, we got a lot done, but it's a lot. I haven't finished the outline fully yet, but it'll be there soon. All right, so we're going to head to Rumble first, and then we'll head on over to all the rest later. I'll see you next Tuesday.